Happy New Year. I'm Carey Cooley.
And I'm Brent Kerwecker.
Clients, 2023 was a remarkable year for the stock market.
Carey, yes it was. I've actually coined it the year of recovery.
After a 19% drop in the S&P 500 during 2022, 2023 rewarded us with returns of 24%, bringing us back to 2021 market highs.
Let's look back at our top 5 financial events of 2023. Coming in number 1 was the aggressive interest rate hikes to combat inflation. Number 2, bank failures. Number 3, another government debt crisis avoided. Number 4, artificial intelligence comes front and center. And number 5, a recession that didn't happen.
Brent, you may be calling it the year of recovery. I'm calling it the year of artificial intelligence.
Yeah, artificial intelligence was a primary driver for 2023, which helped propel the Magnificent Seven to lofty heights for the year.
Without question, the 7 companies listed on your screen were the main contributors to the market's remarkable returns for 2023. Let's look at how the markets finished the year. Dow Jones was up 13.7%. The S&P 500 was up 24%. NASDAQ was up a whopping 43%, and the U.S. Aggregate Bond Index was up 6%.
Heading into 2024, debates are focused on whether the economy will continue to avoid recession, whether inflation will stay on its moderating path, and whether the Fed will cut rates as aggressively as investors currently expect.
Brent, blah, blah, blah. And it's an election year.
Indeed it is, Carey.
The upcoming election year may prove to be unpredictable and volatile. Although history is not a predictor of the future, the slide on the screen highlights past election year performance dating back to President Reagan's first run for office.
Fortunately for investors, analysts are generally optimistic about the outlook for stock prices in 2024.
Heading into 2024, we expect U.S. equities to continue to outpace the international markets, given the U.S. higher growth prospects, stronger earnings and economic resiliency, and greater exposure to near-term beneficiaries of fast-developing AI.
However, U.S. economic growth is expected to slow, challenged by higher financing costs, above-average inflation, and an overall weaker demand outlook.
For 2024, we're focusing on the following: a core multi-factor U.S. strategy that blends quality and value to capture upside with a defensive bias weighting to large value. The insurance industry's strong pricing power to target areas with reliable growth. Tech leaders across information technology, communication services, and consumer discretionary sectors to capture AI-related tailwinds. Dividend growth strategies to lower volatility when pursuing upside, increasing duration in our bond portfolios.
The consensus 12-month analyst target for the S&P 500 for 2024 is slightly above 5,000, which would represent a new all-time high for the index and upside potential of 8 to 10%. Our 2024 predictions for the economy are as follows: a 2% increase in GDP for the year, a slight uptick in the unemployment rate, our prediction is it climbs to 4%, inflation slowly declining through the year, finishing around 2.25%. We believe a recession currently is highly unlikely, and we expect interest rates to stay in what we call a normalized range.
Although it's fun to speculate, we just don't know the future. It's what we don't expect that catches us all off guard. For example, 9/11, bank failures, and unforeseen wars.
Clients, we look forward to an exciting new year full of opportunity. Thank you for choosing Cooley Godfrey Investment Group, where we believe in providing financial guidance and strategies for life.
Please remember to share this video and hit the like button to receive our next video update.